Hello boys and girls, it's Nikos here. Can you all hear me, and can you also see this screen, the chart? Okay, great. So most of you can hear my sexy voice. And the thing is, I still have like about 30 people without audio. And that's not good. So what we do, let's give them about 5 minutes. Okay, people that logged in like 5 minutes ago, I see they still don't have audio. It's a little bit tricky with Gather Place. There's a button that is called there's something like add voice, and you just click on the button and then usually it is okay. Okay, maybe if there's trouble with Java, then it's also not good. But I'll just wait another 5 minutes, okay, before we start, just to make sure they figure it out. Okay, just a little test again. Can you all hear me? Just a quick yes, and then we'll start. We still have trouble with some people. They cannot log in, or sorry, they don't have audio, but that's okay. I think they figure it out later on. Okay, we just have to start because we have to cover a lot of material, and we don't want to be too late. I saw that some of you are in areas where it's already, I don't know, probably night. Some others are freezing. Here, for instance, it's 30 degrees during the day still, so no problem. But yeah, we will also take some breaks, look at the topics here. We have part 1 will be understanding the charts. Okay, that's the top-down approach, finding major support and resistance areas, and identifying ranges. And the second part will be actually trading in a range. We will look for bounce trading setups, how and where to place the trades, and how to manage your trades. Of course, targets and stops to protect your accounts. And then after break, of course, we will take breaks after every topic. Okay, like about an hour for the first, the second, and the third. And we will take breaks in between so you can breathe a little bit and it won't be too overwhelming. And of course, as I said, part 3, bounce trading on the EMA 200 and 633, the top-down approach and finding trend directions, looking for EMA touches and bounces on different time frames, and how and where to place EMA bounce trades, of course. And number 4, how to manage your trades, again, targets and stops. Now, also, I know you will have questions, of course, during the explanation and everything, but please don't write too much into the chat box all the time, because after each part will take like, how long should it take? Like 10-15 minutes to answer the questions if I don't already answer them during the explanation and everything. Okay, so all the questions, write them down if you like on a piece of paper or something, and then you can later on write them also into the chat box. And first of all, before I forget, Jeff Wild, my partner, is also here. So Jeff, say hi to everybody. It's just that we have only we cannot speak at the same time, and I will do the teaching, and Jeff will be there. He will monitor also your questions you have, and later on if I miss something he will let me know, inform me through Skype, and we clear everything up there. Okay, so that's great. Let me look at something here. Still people having trouble with audio, but that's okay. Yes, right now here I'm in Greece, so I get rid of that. I think that's okay. and we start immediately. First of all, do you all have the template I use? It's the Spartan Trader FX template. You can download it directly from the website under downloads. We also make it available later on Nick and Jeff's site. If you don't have it right now, you don't have to worry about it, but later on just go to downloads on the website spartantraderfx.com and you can download it right from there. So actually what it is, it's a classic chart, and we use Heiken Ashi candles instead of the classic candles, in combination with 4 different EMA settings. That's about it. Okay, no other indicators, no MACDs or RSIs, or it's just price action in combination with the EMAs. And we use this yellow or gold one is the 633 EMA. The white one is the 200 EMA. Then we have the red one here, which is the 36 EMA, and the blue one there, that is the 12 EMA. Okay, I will explain exactly how we use everything, and don't worry about it right now. We do everything step by step. Just give me a second, I have to do something. Okay, so in order to understand what exactly is going on, you see the first topic here is the top-down approach. It's about understanding the charts, right? And that is very, very important, because if you don't understand what you see on the charts, it's really hard to add rules and trade actually profitable, right? You need to really understand what you see on the chart, and that is not that difficult. It just needs, like always, a little bit of practice. And we'll start with a top-down approach, and that is something we always do to identify actually the direction of the price. Most important is always price action. All the indicators we use, they're just helping us to actually take a decision or to make a decision easier. But if you don't understand where the price is moving to, the direction, if you don't know what's going on, it's really, really not easy to make good decisions. I think most of you agree, and I'm happy to see so many known names already in the room today, and also so many new people. I'll try to make it really simple for you, not too overwhelming, as I said, okay? And again, the price direction. So what is really going on? And we cannot do that on a 5-minute chart or a 1 or 10-minute chart. Even on the 1-hourly chart, you will not know what is really going on. You won't see the real direction on the 1-hourly chart. Let me demonstrate something for you. If I switch to the 5-minute chart, that's a 5-minute chart, okay? Right now, what does it look like? Any ideas? What do you see? Is it going up? Is it going down? Yeah, it's simply just going up here. And if I scroll a little bit back, right now here, it's the same, it's still the same day. Oh no, so it was Friday, sorry. But what did happen here? It was ranging a little bit, and here it just moved down. Okay, and we have a range there, and it's going up. So you don't really see on the 5-minute chart. You can, even if you squeeze it in like this, do you actually see a direction? Not really. yeah, you see an intraday direction. Yeah, you might see a little bit of an up or down trend, but you don't really know what's going on. And that is very, very important that you see that first. I'll tell you also why, because it's not only for you to make decisions easier, but it's also because all the big traders, all the people that actually make a lot of money trading markets, not only forex but metals, whatever financial markets they might trade, these people trade higher time frames. They look at weekly and daily charts. They don't even bother with the 5-minute or 15-minute charts. Maybe for an intraday entry, maybe to make a few pips, but they usually don't even do that. Yeah, what we do, we try to take advantage of a range, and we also can trade bounce trades on lower time frames. But ideally, we like to focus on the main direction. We want to know what is really going on. Where does the price actually wants to go? Okay, and you can only see that on higher time frames. I hope that makes sense, because it's very, very important that you understand this first. And I know most traders are used to 5-minute and 10-minute charts. They used to make 5 or 10 or 20 pips. But the idea is to get a good entry, and if possible, to split a position into 2 or better 3 parts and leave 1 part running to maximize profits if the chart is telling you that you have a good chance. Do you all understand what I'm trying to say? Just give me a quick yes, no, so I know that I'm not too quick. This is just basic stuff, just understanding what's going on. Okay? Great, perfect. Okay, so as I said, the top-down approach to understand what's going on, to find out the direction. And right now, that is a weekly chart. And if I look at the weekly chart, I can see a lot of history the whole summer, right? And even 2012 and 2011, it's really going back far, which is good. And if you look now at that weekly chart, what do you see? Don't get into details, but just by looking at it, just by looking at it from down here, if you draw a simple support line, price is ranging a little bit. Yeah, everybody probably knows what a range is, right? And then the price moves up and up and up. We get green candles. Every candle here is 1 week. The price moves up and up and up and up and up. Suddenly stops at some point, retraces back, and then it moves up again. But it does not really create a higher point on the chart, right? So this is the highest point we have. Then a retracement, a low, and then the price is moving up again, creating a lower high. So this high is lower than this, and then the price retraces back again, but it's not moving lower, so we don't have a lower point on the chart after this low. So what we don't have is an uptrend anymore. I think everybody agrees that this here is a big, powerful uptrend, right? But suddenly, of course, the price has to retrace, even on the weekly chart. Yeah, the price has to breathe in and has to breathe out. So it's a living thing, actually, right? You are trading here against or with, depending what trading style you have, with millions of traders there, okay, and a lot of money. So the price has to move in one direction. It has to breathe out and breathe in again. And at some point, if the price is not creating higher points in an uptrend, that is the first sign of a change of behavior, right? It could mean that the price creates a lower high in order to change the trend to the downside, or just to retrace a little bit, in that actually not creating a lower point on the chart, so no actual trend change, but only a small breather, and then you see the price moves up again, but at that point it's not creating a higher point on the chart. So the price does not create a new low here, and here it doesn't create a new high. What does that mean? Simply, and it doesn't matter on what time frame you see that. If in an uptrend the price is not creating higher highs and higher lows anymore, and it's not moving lower, creating lower lows and lower highs, that means there is no trend, okay? It could be a range or a wedge, and even a wedge is a range, right? It just looks a little bit different on the chart. The price is stuck, to make it really simple, between 2 or 3 levels. It's not going anywhere. Is that clear to everybody? We just go really step by step, even if you think it's a little bit boring. It's very important that we all are the same. Sorry, what is that? Still trouble with sound, right? I see still people have trouble with sound. I don't know why, really. Sorry for that. So, if you look at that, right now, on this weekly chart, do we still have an uptrend? To make it really simple, yes or no? Exactly, right? And do we have a downtrend? Yes or no? Exactly, yeah, no downtrend. We have actually a range in a wedge, or you can call it triangle. You can actually call it as you like, as you wish, as long as you understand it and you see it on the chart. Okay? Now, that was supposed to be the third part of this, the first topic of the first part, but it's okay. If that is a range or wedge, how could we actually make it visible on the chart? Easy. What do you think? What could we do to confirm a range or a wedge? So a range in a wedge, with other words. Yeah, you have to draw lines, trend lines, support and resistance trend lines. That is really something you just have to practice a little bit. It's really easy, and trading is also easy if you stick to some good rules, okay? Especially money management rules, but we will cover that later on. Okay, so how do we do that? You can do that even on this weekly chart. But how? You just try to find the highest point to draw resistance line. Okay. Now we use Heikin Ashi candles, and if we have spiking candles, that is very important that you see that on your chart, right? You have to identify that on the chart. It's easy to spot. You see a spike or tail, you can just see it there. What we do, we don't start a trend line at the highest point. we start in between the body of the candle. Let me zoom in. Okay, if that's the highest point and here's the body, we start in between and draw a line trying to find at least 3 touches. That would be perfect, because a trend line where the price touches 3 times after retracement or after a bigger move is very, very powerful, especially on the higher time frames. Okay, so in this case, you take your line and what you do is this. You don't have to worry about if the price breaks the line a little bit or it's not touching exactly, but you have to see that the price is creating lower highs here, and so this line is actually pointing down, right? Your resistance line. You do the same thing on support. You try to find something that is pointing out on your chart, ideally red Heikin-Ashi candle on a uptrend, right? Because the red candles are the retracements. The market is breathing out there in an uptrend. So here we have some spikes, lower points on the chart, and what we do, we take our support line and draw it like this. Okay, between the bodies, you can even do it like this. Now, if all the touches are really close to the spikes, okay, in a wedge or in a range that happens often, then it's okay to also draw it on the lowest points if that's what you have. But if not, if sometimes you have a really big spike going down to here, you cannot draw the line like this, right? So that's how you draw the line between the lowest points and the bodies if possible. Now we have a wedge and it's easy to spot, so it's also easy to draw a line with this example. Do you all understand how to draw the lines here in this wedge or triangle or whatever you like to call this? Okay, great. That's perfect. Many answers. That means everybody's still awake. That's good. I know it will be much, but we also have fun doing this, right? Okay, so support, resistance. Great. So did we identify the range or the wedge here? Yes or no? Quick question for everybody, so I know we are all on the same page again. There we are. Great. Let me zoom out. There we are. Just if you also like to take a screenshot for yourself, you can do that, no problem, just to make sure you have it. Also another question, did you also get a chance to download the little ebook I prepared for you and to actually also read it? Okay, that's perfect. So yeah, that helps a lot, because we can save ourselves a little bit of time this way. That's great. So before we go into details, so we are not going to talk about the entries and exits and management right now. That's what we do in part 2 in about I don't know, an hour or so. Right now we're still trying to identify the ranges or the range or the wedge on different time frames to practice a little bit. Okay, now also what I want to do with you before we go to another example is to practice a little bit support and resistance lines, and I'm talking about trend lines like these, but also horizontal support and resistance lines. The reason for that is because sometimes we don't have a range or wedge, but the price hits an area of major resistance or support, and if that's visible on higher time frames, okay, that helps you a lot to if you want to take a bounce trade in these areas. Okay, so I'll use still this chart here. I just delete the wedge a little bit so it's easier for your eyes, and let me zoom in. I will also get rid of the 633 right now and the 200 EMA and even the blue 12 EMA, which is showing us the volatility. I just leave this one open at 36. It's easier for you. Hey, Peter, what is that? This, please go a bit faster. What do you mean? Am I too slow? So everybody, do you want me to go faster? Yes, no, yes, no. Okay, look, I know some of you are already familiar with this, but I have many people in here that are really new to it. So if it's too slow for you, you know, you just take more breaks and come back. Okay, we have a plan and it will take about 3 hours, and I really want to make sure everybody gets it. Remember, our goal here is with Jeff to make you profitable with trading, right? To make it easy for you, to make decisions easy, to make trading fun and profitable. And if I'm too quick, it's not good. Okay? I have experience with this. I'm teaching for a longer time now. So if I go too quick, yeah, for some of you it will be great. Of course it will. But it's also a good repetition. So I would not be too, don't worry too much about being too slow. Okay? As I said, if it's too slow for you, you just watch a movie at the same time. And every time I say something new to you, you can take a break there or something. Okay? Yeah, exactly. It's good to just do it again. It's a refresher for everybody, also for me. Every time, I told you already many times before, every time I'm teaching something, it's also a good reminder, and I always remind myself of the rules and everything. So let's take our time. Yeah, Paul, exactly. Watch Star Trek in between. Okay, great. Now, horizontal support and resistance. Let's do that. How do we do that? The guys that are with me for a longer time already, or with Jeff, know how to draw support and resistance levels, right? And you can help the other guys actually here. So what I'll do, I'll give you an example. This, as I said, is a weekly chart, and that's the first chart we want to check. If you want to trade a new pair, or if that's new to you, the first thing you want to do is using the weekly chart, trying to find out the direction and also major support and resistance. And you have to draw your lines to make it easy for you before you go to the lower time frames and look for trading setups. Okay, great. So I'll just take my horizontal line. There we go. And forget about where the price is right now. We do that later on. Let's just start from down here. I know it's a weekly chart. It doesn't matter at what time frame you do this exercise. You can do it on all time frames. It's a really good thing. So here's my line. And if I check this weekly chart, remember each candle 1 week. Where do we have a lot of touches? I have to zoom in probably every time I do this. Look at that. If I start here and I leave my line down here, do we have a lot of touches between August and 2011 and what is it, February 2012? Is it a lot? Do we have a lot of touches here? Does the price touch this line a lot? Yes. So would that be major support? Yes, of course. It's not that important right now because the price is up here and that is about, I don't know, over 2,000 pips. But if the price is getting close to this area and you have this line ready on your weekly chart, what could you expect down here? Exactly, yeah, a bounce. Let me take this line, I have to zoom out again and take a little bit higher. So if I take the line now and I draw it a little bit higher, again, between the bodies and the peaks, not exactly at the lowest points, because the price never just stops at one level 100%. Sometimes it does, yes, but not always. Mostly it doesn't. But if I check this area, do I have touches here? Yes, the price comes down to here. Previous, this area, if you check this out here, was resistance, right? This whole area here was resistance. So the price came back down. It bounced on here. Moved up, it came back down, it bounced again, it moved up, and these little candles are sometimes, look at that, 200 points. It's 200 pips. It's a weekly chart, right? They came back down, and I'll see, you see we have a lot of touches in this area, here, even a spike from here, 2011. Okay, so would that be also support, major support? In case the price is reaching this level? Yes, it is. Now, the more touches you have, the better on a support line. What you don't want to do is start drawing lines all over the place. Yeah, like here and probably now also here where we have a lot of touches. No, you only draw the lines, the horizontal support and resistance lines, close to support and resistance area at the price level. If the price is up here, you're looking for resistance and support close to this area. Okay, right now we are just practicing. Okay, I think that's everybody understands that. And of course up here, look, touches there, spikes a little bit, but also touches here after a year again. So yes, another support area, previous resistance and support. And it's not that easy. Some charts are really easy where you see price pointing and sticking out all over the place and you draw your horizontal line and that's it. But I just want to use this example because it's a little bit difficult. Now the next major support area, let's do it together. Remember, not the spikes, not the bodies, but something in between. I'll take my line now from here and I will start moving it. And if it's hitting the next support area, remember the price is here, so if the price moves down, that would be support up here, right, in this area. So if I hit the next major support area, you just write OK or something in the chat box. Okay, let's do it together. I take the line from here and I start drawing it right now. I do it slowly. There we go. That was easy, right? Really easy. There we go. So 84, also round number. Price likes round numbers, everybody knows that. Not always by the pip, but the whole area. Okay, great, that was it. Let's do another one, just to make sure. Of course, it's not that easy, but yeah, you can just practice it. I start drawing again, you say stop. Oh, okay. Okay, there we go. There we are. Well done. Great. Easy, right? I'll do it again. I'm drawing right now. Yeah. Perfect. 87, 88. Now it's a little bit tricky, because what we have here in this downtrend, the price is ranging a little bit here. So you are not looking to find each and every spike in red or green candle, but only the areas where the price actually is pointing out on the chart. Okay, so I zoom in, we do it once more. I draw the line, you say stop. Yeah, there we are. That's it. Spikes, okay. Again a spike, and then the price is acting here as support. The line is acting as support, and then resistance, resistance. So easy. And now if you check this area out, we are getting closer to our price. This level did also this line, sorry, was also at this level where the price bounced the first time when it touched. You see the price went up to here, moved up over 1,700 points, and then it retraced about 300 points. You don't see that clearly on that weekly chart because it's still a green candle, but you can see the spike. So do you see how powerful it is when a price is reaching a level of major resistance? We had major support and resistance before as well, but if the price decides to go somewhere, it doesn't mean that it will always stop at major support or resistance. It did it here once, twice, 3 times, and then just went through it. It bounced maybe a little bit on the lower time frames, but actually it moved up higher and higher and higher. And if the price moves up hundreds or even 1,000 pips, even close to 2,000 in this area, in this example, of course the chances of a bigger retracement is much bigger. This example is very powerful because here you see the price did not retrace really a lot, and that's why I chose this example. What traders usually do, if they find an area of support and resistance like this one, the one we had before, right? All these touches in this area here and here and here, or even this one, it doesn't really matter which one you use. What traders do, if they like bounce trading on major resistance, they take a short trade. Look at all these touches. I zoom in. They just sell, probably sometimes with an order, and assume that the price will go back down, trying to find major support again, because this here was also kind of a range, right? Not a range in terms of many touches as support and resistance, but we had also a lot of touches up here, and the price always moved down a little bit. Okay, can you all see the charts? Just a question in between. Okay, so it must be a problem on the other side. Now, what traders do, they take a short, and if they are smart in terms of, or I wouldn't say smart, that is not a nice word here. Let's say unexperienced. Okay, sounds nicer. Sometimes they take a short trade just because they learned the basics of bounce trading. It's just an example. And they just target, I don't know, an area of previous resistance or support, and they just target this area, and if they have experience, they will put a stop over the highs of this range and the target. But some traders, or most new traders, especially even all older and experienced traders, what they do, they say, look, it's major resistance, it's coming from a weekly chart, so it has to bounce, right? So they take the short, they don't put what we call APO, account protection order, not stop. Stop sounds negative, but an APO is actually nicer, because what you actually do by putting a stop, you're protecting your account from a big loss, right? If you also add good money management. So that's what you usually, or what you would do. Some traders don't do it. They try to take the bounce trade, try to go short. And if the market decides to go up, you can draw a million lines all over the place. It wouldn't mean anything, because all support and resistance areas are there to be broken. They will break at some point. They will not hold forever. They will hold many times, and the bounces will be mostly very, very powerful, but not always. And what happens if you take a short trade here because you think it's going to bounce, even if you do the top-down approach, go to lower time frames and have a great entry rule? If you don't protect your account and put a stop in here, what will happen to your account when the price moves up another 1,800 pips and you don't close the position? What will happen? Yeah, only 3 people know what will happen. Yeah, most people don't like to talk about that, because we all have good experience of killing an account, most of us, right? Even I do a lot, because when I started, I killed accounts in no time. And that was not because, or let's say, the only reason was just bad management and no entry and exit rules, no system, with other words. Exactly. Yeah, so that is a good example. And if you, whatever trade you take, even if it's a bounce trading strategy and not a trend following strategy, if you don't put a stop at the right place and you don't add money management, it will kill or make big damage to your trading account. That won't help with your confidence. It will make things difficult. So that's why I want to explain these things. And of course, weekly and daily and even 4-hourly support, trend lines and horizontal support and resistance lines are very, very powerful, but they don't work all the times. They work most of the times. Very, very important that you always remember that. Okay, let's continue with our line, and then we will take our first break. Then you can drink your coffee or whatever you like to drink, or tea. Okay, there we go. This is the line, and I will move it again. You just say stop. We are getting close to the price. I'm looking for more support. I'm moving it now. Okay, you see, it was a little bit difficult here, because what you had, but you were right in the end, you have this previous resistance bounce where the price bounced again 400 points. You have another touch here, okay, where you have spikes, and you have some touches there. I think it's not that easy to spot. Let me zoom in. You have touches here and also some spikes up there. And sometimes if it's not easy for you to decide if that is your resistance area or support area, or down here, if you're not sure what you do, you just draw a area of resistance or support. So you take the previous touches you have on the chart that are close to the price. Okay, that is the USD yen weekly chart. Okay, and you look where else you have your touches. Look here, February 2008, almost by the pep. And then some spikes here and spikes up there, but over 100 pips. So what you do, you take another horizontal line and draw an area of resistance like this. This will cover the spikes in the touches if you are not sure. In the beginning you can do that. Later on you don't have to do that. What I'll do, if I have an area of support or resistance like this, I'll just take this line, instead of having it down here or up there, I leave it in the middle and get rid of the other line. This way it's easier on the eye. Is it okay? Did you all understand what I mean? Great. So if you take the chart now from here, the line, sorry, from here, and we are getting really close to the price, right? Look at that. That means down here we have actually major support because of our line. We also have this wedge with 1, 2, 3, 4, 5 touches at the same area. So we have horizontal support, we have a trend line support, we even have our trend guide, the 36 EMA, close to that line in the price. So 3 things, tools we use, important tools, are lining up right here. So do you think that is powerful or important or not for us? It is, right? Exactly. Very, very important, right, Pierre? So here's the price. It reached this area. It actually bounced already there and moved up. And let's now do something else now that we have the price close by. This is actually our support area. Let's look for resistance right now. I just take this line and I move it over the price, okay, not below. So we are looking for resistance right now. Let me zoom out a little bit. I start from up here. We make it really easy. I'll take this line and I start moving it, and you say again okay and stop when we reach resistance. Now I'm moving it now. Okay, let me check. Touches there. Yeah, we have spikes here and spikes there. Also, this is the highest point on the chart as we see it here. If you have a 17-inch screen or even a 15, I think would be enough to see this history here on the chart if you zoom out a little bit. And what you see usually on a chart like this, on a weekly chart, is enough for you to find major support and resistance. You don't have to go back 100 years. Okay, that is enough for you to work with and make powerful trades. So also this is the highest point on the chart. Even if you don't have the spikes here, that would still be major resistance, because that's the highest point since, I don't know, what is it here, 2009, right? And that is of course resistance. Now we take the line again and I move it. Just find resistance, please. Say stop. Okay, there we are. The next high in combination with a touch here. Enough. You don't need million touches, 2 or 3 visible touches on a horizontal line here is okay. And then another one closer to the price. I move it right now. Okay, yeah, so we have the spikes from here to down here. We have a lot of touches. So again, we have a zone of resistance. We have the touches there. And we have also a lot of touches here. And what we do, we take another line, leave it in the middle. If it's a round number, also great. 99 looks good. 99 something, and we get rid of the other lines. Great. You see many touches there, here, here, and also here. So right now, if I zoom in again, what do we have? Major support, a wedge. We figured out that that is a range. We also have a trend line here, and that is our wedge, and we have horizontal resistance close also again to this line. So if the price is reaching this area here in combination with horizontal resistance, it will be powerful. Even without, it would be powerful. But if you have even horizontal resistance in this area, it makes things even more powerful, usually. Good information. Are we all okay with how to draw horizontal and support, resistance, support, and lines? Sorry. It's not that difficult, right? And are we all okay also with our wedge here? And the range between the price ranging between these levels? Okay, that's it. And what we do now, I'll just use one more example, and we do it quick just to make sure we all understand this, and then we have a little bit time for some questions, and then of course we take a break. Euro yen. It's difficult now. It's not an easy chart. This is the weekly chart. I make it really quick. Oh, my mistake. I left the line, so easier for you. Where is our resistance area? Up here, right? Look how many touches we have. 1, 2, 3, 4. Let me delete the EMAs. And is this an uptrend? Yes, it is. Do we have a clean change of the trend? If you draw just a trend line by connecting 3 or more touches, right, you will see there's a clear break. The price moved up and it's trying to reach these levels up there, because we have a lot of spikes and we also have a lot of touches there at the same level. So yes, it's an uptrend, but we are reaching major support and major resistance again. If I take another horizontal line and start drawing it, look at this area. We have also many touches here, right? You see that here and there and there and there. And what happened in this area? The price bounced in this area. Again, we had a zone of resistance, of course, because you see there are spikes and buddies. So what we do, we always leave the line between the spikes and the bodies there. We're pointing out. And the price, yes, it bounced, retraced, but it did not really change the trend. We still have, if you look at this, we still have higher highs on the chart, and we still have higher lows. This high here is higher than that. This low is higher than that and that. So is that a range, or is it still an uptrend? It is, right? Now you could draw support close to the price, and now that the price is below the horizontal resistance line, and you see that we have a spike there, but then the price moved back below resistance, we have some trouble here, right? It's not like right now it's the pressure is there, but does it really look like it wants to move up right now? If you look at the chart like this, support there, resistance there. Right now it doesn't. Compare this to the previous example and you will see we have a difference here. Yeah, we have a wedge and the range, the price creates lower highs, okay, and it creates higher lows, but on the other side also lower highs. And if you go to this example, the price creates higher lows and still has higher highs on the chart. And that means even that if you identify a range here on the lower time frames, the clear pressure is still what? Is it up or down? Pressure is still there. The weekly chart is telling us that the price is still trying to move higher. And that is an example where we need to be careful. If I switch to the daily chart now and I zoom in, you'll see we have a lot of touches and spikes and crossovers, and that is not looking nice. It's just telling us that traders don't know what to do right now here. Okay, should they sell? Should they buy? It is a wedge, yes, and of course there are ways to trade the bounces, but in a wedge like this, or triangle, whatever you call it, where we still have a pressure to up, we would like to focus still on bounces close to support rather than taking bounces at resistance. What I mean is, it's better to look for long setups if the price hits your support line than looking for shorts. Do you understand the difference? It's because the higher time frame is clearly still pointing up compared to the previous example. Okay, so did we identify this wedge here and the bounces on the support line, but knowing that it's going up? Yes, right? Exactly, for instance, yeah, the third lot would not be able to run if still squeezed in. So actually this is not a range, it would be bounce trading on major support still with the main direction, even if we know that we have major resistance here and the price did bounce in this area. Because the price did not give us lower points on the chart, it did not find previous support areas, this is not a clear range. Does everybody agree with that? Yes or no? Perfect. So we had two examples, an easy one and a difficult one, and we are going to have more examples after our break. And as I said, that would be looking for range bound trading setups. We look at other pairs and previous live examples we already also took together with some of you. And then we are going to also cover, of course, the details, where to enter, where to place stops, and how to manage these trades. Okay, but before we go to part 2, we take our break, and right now it's time for questions. Do we have any questions according, of course, I mean, if it's about what we did in part 1, not about, for instance, if the weather is nice or something like that, right? Just about part 1. Any questions? Anything I didn't explain correctly, or you might need to repeat? Sally, that's a good question. What was part 1? Great. That was the previous hour. Part 1 was understanding the charts, the top-down approach, finding major support and resistance, and identifying ranges, right? So no question. That means that I explained things pretty nice. So I can clap myself on the shoulder. There was a there was a question about the trend line. No, look, a combination of both is the best. Like if you have horizontal support and a trend line at the same line, at the same price, probably with an EMA bounce, of course, the more the better, right? Yeah, Bill, we are going to talk about the 1, 2, 3s also, if we have a little bit of time, and part 3 and part 2, okay? Confluence, yes, Benjamin, you're right. So let's not talk about right now taking any trades. Let's just talk about our subject. You know, it's about bounce trading and about this session today, and not about a particular setup. But of course, later on, if we have time, I'm happy to also do an analysis with you and look for trades for this week, upcoming week here. Yeah, we are going to cover the lower time frames immediately after the break. I just wanted to get over the basics. Remember, we have like 3 hours, and we want to get over the basics and the detailed entry levels and management and everything. Okay. I don't understand this question, sorry. John, the horizontal support was not only on the 3 touches, but you want longer on the past weeks? Sorry, I don't understand the questions correctly, actually. I will go over the EMAs. I didn't cover the EMAs yet, so don't worry about it. Okay, great. If we don't have other questions about the session, about the first part of the session, we'll take a break, a 15-minute break. If you want to help the other guys that logged in late by writing something in the chat box or explaining what we did, would be great. And then I'll catch up with you in about 15 minutes, okay? And then we start with part 2, trading in a range. Is everybody okay with that? 15-minute break? Perfect. Awesome. Okay, great. I'll see you soon. I will also pause the presentation on the charts right now, so you won't see any charts for the next 5-10 minutes, okay?